All right, so people are asking me what the hell's going on with cocoa. Now, let's have a quick look at this because I'm sure a lot of you have been trading this. Even though it's been pretty perilous, as you will know, if you've been trying to short this at any one point. I have covered cocoa in the last couple of videos, and I'll link the last one up in this video. Today, we've dropped about 15%, actually 16% now, and trading just around about 9,000, I suppose, just above this red line, which is the 50-day moving average. We convincingly broke out of the steep trend line. I just drew in a little trend line, this green one here, sort of an intermediate one, and we broke that and the 20-day moving average, which is this green moving average right here. Now, below us, we've got this next trend line. That's the intermediate, longer-term trend line, and the very flat long-term one is right down here. Now look at where this is, and let me just zoom in on this quickly. This is the day chart, but you can see the potential for us to move down to that trend line at around about 8,200, bearing in mind the 50-day moving average is at about 8,460. So somewhere between 8,450 and 8,200, somewhere in that region, is probably where this will bounce. As today's about to close, we're not going to get there today, but if we get another move down tomorrow and touch that line, that might be a good place to unhedge some of your position. Now, I know I've been in contact with a few traders who are hedged both long and short, wondering whether to exit the long side or the short side. And my general advice is I'd like to exit the long side somewhere back near the 20-day moving average. That's currently above 10,000. I think overall, now that we've broken this line and the 20-day moving average, the general direction is now down. The trend direction has changed until we get to the next trend line. So I've got a hedged position on this as well, because after a 15% move down in a day, 16%, it's probably not likely to continue. And in fact, there's no time left today. If we do carry on moving down tomorrow towards about 8,200, I'll consider exiting the short side of my hedge. On the other hand, if we move back up to the 20-period moving average and to the underside of this intermediate trend line, that would be above 10,000, probably around 10,200 to 10,500. So if you're looking to short, and the direction I think now is short, that'll be the place to look at. Wait for a big retracement back up above 10,000. It's very volatile at the moment. If you don't get that there, well, then you've missed out, and don't let FOMO drag you into a trade which could just go ballistic one way or the other. On the other hand, if you're looking to buy into dips and you think cocoa's got some more legs left in the long side, then around about 8,200 to 8,500. However, I don't think that's the best play. I do think the direction has now changed, that we're looking for shorts. We've only got one day, that's today, below the 20-day moving average, and that's very significant. We have not done that for a very long time. But I'd like to see 2 days underneath the 20-day moving average, ideally with a spike back up into that trend line and a move down and a close beneath the 20. Well, good luck if you're trading cocoa. It's been a wild ride, 15-16% a day, and this market has moved from 2,500 up to about 12,000 in a matter of about a year.